Taking a look at the advanced decline line divergence, we talked about this in our daily video and I wanted to explore it a little bit more, see what this was all about, and it's really, I looked at this a little bit more and saw that these gap downs, just a gap down the ADD line looks very bearish, and it's hard to determine whether it is or not because there's not a lot of times this has happened. And so if you see, not only did the advanced decline line trend down while the market trended higher in the S&P versus the advanced decline line for the NYSE, you see not only a downtrend but a gap down in the advanced decline line. So this high is less than that low, this high is less than that low, and so that just looks extremely bearish. So what happens in this case? There's only one time that it's happened in a certain scenario. I'm going to show you that. The basic case scenario, this has happened 4 times since 2007. The advanced decline line goes back to 2007. And so if you look at this, if the high is greater than the high of the 1, the high of the 1 is greater than the high of 2, and the high is less than the low of 1, and the high of 1 is less than the low of 2, of data 2, we're looking at data 2 on these second 2. So we're just two gap downs with 2 higher highs on the daily chart. What happens? You get a sell signal today, but is it worth taking? I'm not taking this signal. We have a $3,000 stop loss and a $5,000 profit target on this setup, and you're 2 for 3. So only 3 trades prior to this. We're going to look at those, and then we're going to further narrow it down to something that's never happened before. And so you see in 2017, that was a very just strong year. If you look at 2017, it's an extremely low volatility, really one of the more dull markets, record low VIX, I think in the 8 handle, all the way down the 8 handle. 2017 started here, and you just see this market that just moved all the way up all year long. And so very unusual year 2017, and so it's impossible to short it in 2017. So it lost in 2017, profited in 2014, profited in 2015, and then now we get the signal. It's been 5 years since 2017, since the last signal. This is very unusual for this to make this type of price action. What's also additionally unusual is if you take this and you require, and the close is less than the close of 1. So we have 2 higher highs, but it closes down, and then the advanced decline line gaps down 2 days as well. And so just to verify, let's verify this strategy. And I'm going to go over that note at the bottom next. There are no trades. Today is the first time you get a signal for that since 2007. And see 0 on the performance report because you have a short signal at the close. No previous trade, so this has never happened before. And there you have it. And basically, once again, this high is greater than that high. And let me get the pen out to make this a little bit easier. This high is greater than that high, and then this high is greater than this high, so you get higher prices. You get this close, it closes down from yesterday, close down, and then you get gap downs in data 2. So this would be considered a bearish price action, especially with the selling at the end of the day, and kind of almost a key reversal day. It didn't trade below Friday's low, but it was stubbornly high today while the advanced decline line continues to trend down, and so there is no data for this setup, so I'm not going to trade it, but just wanted to note this extreme divergence, I guess you could say. We saw it on the intraday charts, and then now we look at it on the daily charts to see the gap down, and so it could be a very bearish signal. It'd be interesting to follow, but I want to discuss this because divergences are important. We talked about a VIX divergence recently as well, and now we have an advanced decline line divergence.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.